Joshua Mahony is Chief Market Analyst at Scope Markets. Hello, Josh. So picking up on what John was talking about, is this volatility mostly just a reaction to Nvidia and other tech stocks and US data, or is there actually more at play here globally?
Well, I mean, look, we've got ourselves into a position where everyone's been waiting for years, it feels like, for this pivot from the likes of the Federal Reserve, and we're on the cusp of it. And instead of thinking about that and thinking about the possibility that we're going to see all these pro-growth measures coming from central banks, people are now concerned that finally those lofty interest rate hikes are going to really take a toll on the US economy. Now, bearing in mind that we've just come off the back of a second quarter earnings season that has by and large been a strong one, but there is a feeling that many of these stocks are priced for perfection, in particular the tech stocks. So if we do see this potential unwinding in terms of the US economy, some big question marks about how quickly monetary policy would be able to rescue it, and these companies that have been priced for really significant growth could be really overvalued if we do see that deterioration in terms of the US jobs market, in terms of the US economy as a whole. And of course, added to that, if you cast your mind back to where we were a month ago, where everyone was worried about this jump in terms of unemployment, we also saw this whole dollar-yen carry trade unwinding, and the idea that suddenly all this money is going to move out of US assets, and suddenly we're going to see a big move lower in terms of equity markets. That comes back into play at the moment as we see the likes of dollar-yen moving towards the downside. The Federal Reserve, how are they going to react if we do see another particularly weak jobs market?
So is it possible to say whether we've seen the worst of it or it could get worse still?
Well, I mean, it depends on whether you're talking about the market and whether you're talking about the economy. In terms of the economy, it can definitely get worse still, because as it stands, we've still got strong data when it comes to GDP. We're certainly nowhere near a recession right now. And certainly if you look at the latest Atlanta GDP Now forecast for Q3, they forecast that we're going to get 2% growth for the third quarter. That's an annualized figure. But when you're talking about the markets, it can definitely get worse, right? We've only seen roughly sort of 2% declines so far from the peak, the recent peak for like the S&P 500. And generally, when we see these sort of decent pullbacks on significant concerns, you might see a sort of correction, which might be a 10% decline. So there's plenty of downside to come if we do see markets continue to grow fearful around this. And, you know, there's a number of different ways of looking at this. But certainly if we're looking at the possibility of additional interest rate cuts, some people might think that's a really good thing. Maybe they might hope we see a 50 basis point cut. But that's not necessarily something we should be hoping for. We want a Federal Reserve that is not freaking out about the position the economy is in, because that, of course, means exactly that the US economy is not in great shape. Hopefully, we see a 25 basis point cut from the Federal Reserve, and we see relative calm within the markets.
Yeah, so steady as she goes. As Nvidia stocks get sold off, where are investors looking to put their money?
Well, I mean, look, some people will be putting it into Nvidia, quite frankly, because, of course, we saw this massive near 10% decline for the company yesterday. And that capitulation doesn't necessarily mean it's all done and dusted and suddenly we've seen the absolute top for the company. We saw them beat on revenues and earnings, and while some people felt a little bit underwhelmed in terms of the outlook, it still did beat the average outlook, the median outlook for the third quarter. And so that slowdown in terms of growth was expected. It's not something that suddenly has just crept up on us and people are just realizing that it's happening. The company continues to grow at a fast clip. So Nvidia, whilst we have these question marks about this potential DOJ move, you know, I don't necessarily think that's going to be a massive deal at the moment, but certainly if people start to go defensive, which is what we have been seeing, then the likes of utilities always a relatively safe bet.
All right, thank you so much. Joshua Mahony, Chief Market Analyst at Scope Markets.